Good morning, everybody, and welcome to a new episode of Merrill's Monday Market Madness. Coming at you really quick with an update regarding the Phoenix housing market. Today is September 26th, 2022. So today, active on the market, we have 19,792 active listings. At our low point this year, back in February or March, we were at about 4,000. So we have almost 5 times more active listings on the market today as we did just about 6 months ago. There are 8,244 listings that are currently pending, and we saw 5,680 homes close in the past 30 days, giving us a month supply of inventory of 3.48. Now, here's the interesting the month supply of inventory is interesting to me. So we're at a 3.48. Last Monday was also a 3.48. The Monday before that was a 3.47. And then 4 weeks ago was a 3.35. So we haven't really seen a significant change in that month supply of inventory number. It's gone up, what is that? 0.12 points in the past 4 weeks. In other words, the kind of supply and demand is really, really balanced right now. Inventory has increased. So 4 weeks ago, there were 19,076 active listings. Today, there's 19,792. So in 4 weeks, we've gained 700 listings. So every single day there are, what is that? So 4 weeks, 28 days, 700 listings. I should have done the math on this before starting the show, but now I kind of want to know what it is daily. So 700 divided by 28, 25-ish. So every single day there's 25 more homes coming on the market than what's coming off and what's selling. But that's not a significant pace. We were at a point where we were gaining that many active listings every single week. And now that's how much we've gained over the course of a month. So inventory is still going up, but it's going up at a pretty slow pace. It's really, really leveled off. Days on market is, going up a little bit, and we expect that will probably continue to rise as we head into kind of our slower selling season. Of course, the nice thing about the Phoenix housing market is we never really see like this massive drop off, a huge, fall off of, absolutely no home sell in the winter, like, some of these really cold, snowy climates. Of course, we've got snowbirds and a decent amount of activity that happens here during the slower months. But typically we do see inventory rise, in the fall and heading into the spring. I'm going to go ahead and share my screen with you all now to show you a couple other graphics that I thought would be important. So this first one here is called the Cromford Market Index. It basically measures how hot the market is. So as you can see, back in March at our high point, we were at a market index score of about a 457. And now we are at a 105. But here's the thing is it really, it's really not changing much. You go back about a month and it was at a 106. So the market index, it was falling rapidly back in May and June and July. But then by mid-August, it really leveled out, and we continue to see that it's not hardly moving at all, moving down ever so slightly. Now, one thing that is interesting is the average sales price. There's a ton of graphics on this chart here, and I don't mean to overwhelm you, but the average sales price so far over the past 30 days is $535,276. Last month, it was $550. So we did see a drop in the average sales price of about $15,000 month over month, which is like, almost 3%. That's pretty significant. The highest 30-day average sales price that we saw was about $602,000. So from the peak, we've seen a drop of about 67,000. But compared to last year, right, the average sales price, this was last year. Yeah, so the average sales price last year was $492. So even at $535, year over year, average sales prices are still up by $43,000. Another interesting metric here. This is a chart. I've shown this before that shows how many price reductions are happening in a week. And we did hit an all-time high of price reductions last week of 4,205 homes that reduced their price. The previous high happened the week of July 24th with 4,172. Of course, there weren't quite as many homes on the market in July. So as a percentage, of homes reducing their price, there was still a lot more, greater percentage of the available homes had to reduce their price in July as compared to last week in September. The average mortgage rates, you probably heard, the Fed raised the federal funds rate by another 0.75 percentage point. Average rate right now on a 30-year fixed, according to Freddie Mac, is a 6.29, which is, obviously the highest that it's been over a 10-year period. But, looking all time rates will last in this range roughly in 2006, 2007. So, rates and affordability are, definitely a big factor of what's causing the market to kind of struggle. But here's what I would kind of leave you with, and I'm going to figure out how to stop sharing my screen here real quick. Let's see here, share screen. All right, there we go. So here's the final point that I want to leave you with. The market, as I've shown, has fallen. Prices have dropped a little bit, but it appears to be stabilizing. And I still believe that buying is better than renting. I mean, that's ultimately the alternative, right? If you have to live somewhere, do you want to own a home or do you want to rent? Now, of course, for some people, renting is the better option. But when you rent, first of all, you've got the kind of lifestyle problems, right? You're not allowed to paint it whatever color you want. There's a possibility that after your lease is up, the owner could decide to sell the house and you've got to just move. I've had tons of people who are like, look, we love where we live. We don't want to move, but our landlord is selling, so we had to move. We've been, so you don't really have the stability of being able to keep your kids in the same school and being able to stay in the same neighborhood. Also, if you do fall on hard times and you have to miss a payment, boy, as soon as you're 2 weeks late on your rent, the landlord's probably going to issue or begin threatening at least to issue, eviction notices and things like that. On a mortgage, certainly the bank's not going to be happy if you're late on the payment either, but they don't even begin, issuing notice of default and possible foreclosures until you're 90 days late. So if you fall on hard times, you're given much better flexibility in the amount of time that you have to be able to get back on your feet. But also there's the financial benefits of owning a home versus renting. When you own a home, even if you're, let's say you could rent, let's say the identical house is available for sale and for rent, which we do see that happen sometimes. Sometimes owners will put their home up for sale and for rent and just see which one materializes. And let's say that you could buy it and your monthly payment would be, $300 a month more than what it would be if you rented it, right? So a lot of people would say, well, I'm going to save $300 a month and go rent it. But here's the thing, when you own the home, a portion of your payment, maybe not $300 initially, but eventually a portion of your payment is going towards your principal. So it's almost like you're putting that money into, paying down the balance of that loan. It's going into your net worth. If you were tracking your net worth, your equity is going up with each payment that you make versus when you rent, of course, none of that payment is ever going into your net worth. It's all just being paid. It's all just being paid to the landlord. Number two, you get tax benefits, of course, to owning a home versus renting. I'm not a tax expert. I would definitely recommend consulting with a tax expert. For most people, the interest on their home is potentially tax deductible, and that saves them thousands of dollars on potential tax income liability. And then, of course, the big one is equity gains in the long run. I don't really care maybe I'm wrong. Maybe the market's not leveling off. Maybe home prices are going to drop another $20 or $30 or $50,000. I don't think that's going to happen, but just let's say I'm wrong. Obviously, people think I might be biased. So let's say that I'm biased and I'm wrong and prices drop 50,000 in the short term. In the long run, real estate never goes down, like ever. Like just look historically, pretty much since the beginning of time, real estate always goes up. There's a fun quote that I like sharing. The best time to buy real estate was 5 years ago. The second best time is today. I mean, real estate appreciates, in the long run over time, always. And so in the long run, you will gain a lot of wealth and a lot of equity by owning a home versus, when you rent, you're never going to gain any equity. Pretty much the only guarantee that you have is that your rent over time will rise. So those are some thoughts I just wanted to leave with y'all. I hope you all have a wonderful week, and let me know if you have any questions.